You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 5th day of July, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. The first live broadcast is our live training room that runs from 9:30 a.m. to 11:30 a.m. Eastern. That is reserved for members only and those who are taking their 1-week free trial. If you've not yet taken your 1-week free trial, you can do so by going to mytradingiq.com. At the top of the page, there's a button that says 5-day free trial. Click the button, the journey begins. No credit card required. Doesn't matter what day of the week or weekend or hour of the day that you sign up for the trial, you will get 5 consecutive trading days, not only in the live training room, but with complete access to all the resources that our lifetime members have access to. Now, when the live training room ends, we take a 30-minute break and we come back at 12 noon Eastern for this broadcast, which is open to the public. Now, there's 2 different ways you can join this afternoon broadcast live. The best way, go to mytradingiq.com, scroll down to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and you're done. Every trading day going forward, you'll get an email about an hour before this broadcast starts. At 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. And when you join that way, you have access to the question box, so you can ask questions and participate in the discussion. Now, there'll be days you're out of the office, away from your desktop, but you still want to join the afternoon broadcast live. And there'll be days when you're just busy and can't join live, but would like to enjoy it later. Well, we have a solution. It's the same solution for both situations. It's called our YouTube channel. youtube.com/CFRN. You already know the youtube.com, so just remember /CFRN. Not only do we broadcast live on our YouTube channel each and every day, as we're doing right now, we also archive each and every daily broadcast. Currently, there's over 2,200 daily episodes archived for your educational and viewing pleasure. So, here's how it goes. We're going to open with our devotion, word of prayer. We'll take a look at the topic of the day. Get stopped out much? We'll look at the numbers from around the world. About that time, Michael will join us, give us a recap of what happened in the live training room. Then we'll trade live for 30 minutes on the TradingView platform. And when we're done on the TradingView platform, we'll then complete the recap of the Logic 247 alerts and the Concierge trade alerts. So, with that said, also, when we finish trading live on the TradingView platform, that's when we announce our tweet of the day. So let's get rolling. Last week, our topic was wisdom. This week, habits. We all have them, some good, some bad. Our scripture today is Romans chapter 7, verses 15 through 25. And I'll be sharing with you from the Message translation. I can anticipate the response that is coming. I know that all God's commands are spiritual, but I'm not. Isn't this also your experience? Yes, I'm full of myself. After all, I've spent a long time in sin's prison. What I don't understand about myself is that I decide one way, but then I act another, doing things I absolutely despise. So if I can't be trusted to figure out what is best for myself and then do it, it becomes obvious that God's commands are necessary. But I need something more. For if I know the law, but still can't keep it, and if the power of sin within me keeps sabotaging my best intentions, I obviously need help. I realize that I don't have what it takes. I can will it, but I can't do it. I decide to do good, but I don't really do it. I decide not to do bad, but then I do it anyway. My decisions, such as they are, don't result in actions. Something has gone wrong deep within me and gets the better of me every time. It happens so regularly that it's predictable. The moment I decide to do good, sin is there to trip me up. I truly delight in God's commands, but it's pretty obvious that not all of me joins in that delight. Parts of me covertly rebel, and just when I least expect it, they take charge. Tried everything and nothing helps. I'm at the end of my rope. Is there no one who can do anything for me? Isn't that the real question? The answer, thank God, is that Jesus Christ can and does. He acted to set things right in this life of contradictions where I want to serve God with all my heart and mind, but am pulled by the influence of sin to do something totally different. Now that was Paul writing, again in Romans chapter 7, verses 15 through 25. So let's start with a healthy identity. We all want good daily habits, but instead we do things like sleep in, get to work late, get home late, yell at the kids, eat or drink just one more, and then check our email in bed. So how do we start breaking bad habits and start making good habits? Isn't there a simple 3-step plan that will set me free? Not really, but there is hope, and God's Word is full of it. Craig Groeschel, Life Church pastor, says one of the biggest reasons people fail to keep good habits and break bad ones is because our distorted identity sabotages our success. This brings us the first letter in the habits acronym that we'll use as we discover a better way to make and break habits. So H is for healthy identity. Often, when we're getting ready to start something new or get rid of a bad habit, we make a plan based on what we'll do. Instead, we need to start with goals based on who our God is and who we want to be. Saying I'm going to run a marathon is based on what you want to do. Saying I am fearfully and wonderfully made, and by God's strength, I want to become a runner, is based on who God is and who you desire to become. This is an identity-based goal. We need to put who before do. Identify goals are one aspect of discovering a healthy identity. The next bit of freedom comes with digging into past hurts, lies you've believed, unforgiveness, mistakes, and life situations that may have brought you to believe in a version of yourself that may not be who God made you to be. As you discover the lies, you'll want to replace them with God's truth from His Word. A healthy identity based on what God says about you is the foundation for breaking bad habits and making good ones. For example, too many of us have believed a lie like, I'll always be this way. That's an identity-based fear that needs an identity-based truth. Something like, the Spirit of God didn't give me fear. He gave me power, love, and self-control. So over the week, think about, what are some of your identity-based lies that you can replace with God's truth? Join me in a word of prayer. Heavenly Father, in humble surrender we come before you. We acknowledge the battle within us. As we reflect on the words of the Apostle Paul in Romans 7, we recognize that our struggle with sin and our desperate need for your grace. Lord, we confess that we often find ourselves doing what we do not want to do and failing to do what we know is right. Our human nature is plagued by weaknesses, temptations, and the allure of sin. We're trapped in a constant battle between our flesh and your spirit. But in the midst of our struggle, we find hope in you. We thank you for the victory we have in Jesus, who conquered sin and death on the cross. Help us to rely on His strength and His grace as we navigate the challenges of our daily lives. Renew our minds, God. Transform our hearts. Grant us a deep understanding of your unfailing love and the forgiveness that we find in Christ. Empower us by your Spirit to walk in righteousness and holiness, choosing obedience over sin. We recognize that on our own we are weak. We cannot overcome sin and its grip on our lives without you. We surrender today our weaknesses, failures, and struggles to your compassionate and merciful hands. Help us to depend on you completely and to seek your guidance in every moment. Lord, as we face the battles within, remind us that we are not alone. You're with us, fighting on our behalf. Strengthen our resolve to stand firm in faith, resist temptation, and to live in alignment with your will. Teach us to rely on your word, which is a lamp to our feet and a light to our path. In our moments of weakness and discouragement, pour out your grace upon us. Fill us with your peace that surpasses all understanding. May your love envelop us, reminding us of our identity as your beloved children and empowering us to live a victorious life. It's in Jesus' name that we believe and pray. And everybody said, Amen. Well, happy Wednesday. Hope it's a happy Wednesday for you, wherever you are, wherever you are. Hope you had a great holiday. If you got out, saw a few fireworks. Let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow's down 120 points. The NASDAQ is down 24. S&P 500 down 8.5. Take that 9. And the Russell 2000 are manning the street, leading the pack to the downside. Down 16 points, which for the Russell is almost 1%. In the commodity basket, crude oil up $2.22, trading 72.01 last. That's a gain of over 3%. Gold up 70 cents, trading 19.30 last. Silver up 32 cents, trading 23.44 last. For silver, that's a gain of 1.5%. In the Asian markets at the close, Nikkei down 83, Shanghai down 22, Hang Seng down 305, which is a little over 1.5%. And in the European markets at the close, FTSE down 77, that's a little over 1%. The DAX down 101, the CAC down 59, which is just shy of 1%. So that gave us a red day in Asia. It was a red day for the UK. So far, it's a big red Radio Wednesday here in the US of A. With that, let's go to our topic of the day. Get stopped out much? Well, the answer is yes. In the world of trading, getting stopped out is a common concern that every trader must deal with practically every day. While it can be disheartening, it is essential to recognize that being stopped out is as much a part of trading as breathing is a part of life. So we're going to talk about the significance of getting stopped out, why it is an inherent aspect of trading, and how traders can embrace a stop out as a valuable learning opportunity. Number one of the primary purposes of placing stop loss orders is to preserve capital and manage risk effectively. Trading is a business based on probabilities. So of course it involves uncertainty. And no trader can predict market movements with 100% accuracy. No man, no machine, no indicator, no oscillator, no algorithm, not no way, not nowhere, not know how. By setting stop loss levels, traders define their risk tolerance and limit potential losses. Getting stopped out ensures that losses are contained within predetermined parameters, protecting your trading capital and maintaining long-term sustainability. 2. Financial markets are dynamic, influenced by a multitude of factors, such as economic news. This afternoon at 2 o'clock, we'll get the minutes of the last Fed meeting, and that should bring with it some volatility. And our recommendation is always don't trade the news or the econ reports. Our idea is to find high probability, low risk trade setups. But when you have a powerful economic report coming out, you never know how the trading world is going to receive that news, be it good or bad. Once upon a time, good news always sent the market higher and bad news always sent the market lower. But things have changed. So trading news events, unless that's your specialty and someone has trained you in that art, it's a lot like gambling. And that's the very thing we don't want to do. Market conditions can shift rapidly, leading to unexpected price movements. Getting stopped out is an inevitable consequence of market volatility and can serve as a reminder to adapt to changing conditions. Like when you know there's news coming out, you put the mouse away until the market has a chance to absorb the report, the news, whatever it is, and then the market returns to its normal rhythm. That's when it's safe to get back in the water. Getting stopped out is an inevitable consequence of market volatility. Prompts traders to reassess their strategies, reevaluate their risk management approach, and make necessary adjustments to align with the evolving market landscape. Next, trading is not just about analyzing charts and executing trades. We all know it tests a trader's psychological resilience and emotional control. Getting stopped out challenges traders to manage emotions such as frustration, disappointment, and self-doubt. It teaches valuable lessons about maintaining discipline, sticking to your trading plan, and handling losses objectively. By embracing the stop out as a learning opportunity, traders can develop mental fortitude, emotional intelligence, and the ability to bounce back from setbacks, which are essential qualities for long-term success. Every stop out can be viewed as a learning experience. It offers traders the chance to reflect on their trading decisions. It also helps identify flaws in whatever strategy you might be using and learn from those mistakes. Analyzing the reason behind a stop out can provide valuable insights into areas that require improvement, such as trade entry timing, position size, or risk management techniques. Traders who embrace the stop out as a learning opportunity can refine their strategies, enhance their decision-making processes, and evolve as more competent and knowledgeable traders. Remember, trading's a marathon, not a sprint. It requires discipline, patience, and a long-term perspective. Getting stopped out can test a trader's ability to adhere to their trading plan and stay patient during periods of drawdowns or flat market conditions. It reinforces the importance of following predetermined rules. That's why every one of our lifetime members receives the 24/20 blueprint, which helps them write their business plan and their trading plan. 9 out of 10 new traders don't even know they need a business plan or a trading plan. But that's not even the main reason they fail. The main reason is because they don't have someone to teach them how to do the job. That's why we have 2 hours of live training every trading day. By embracing the stomp out as a natural part of the trading journey, traders cultivate discipline, patience, and a resilient mindset necessary for consistent profitability. Remember, getting stopped out is akin to breathing in life. Traders must accept that losses are an inherent aspect of the trading process and understand the valuable lessons they offer. You see, for many traders, when they get stopped out, they don't understand why they got stopped out. If you don't understand why you got stopped out, then that leaves you feeling sick, weak, and nauseous. But understanding why you got stopped out, that turns it into a valuable learning experience. You have to recognize the importance of preserving your capital. That's why our 24/20 blueprint doesn't put you into the market with real money right away. No. You've come to learn a strategy and a set of indicators and our weekly zones. It's going to take a little time. That's why the blueprint puts you on a path where you put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Only then should you think about trading real money. Once you've completed those 10 consecutive days, that's when the 24/20 blueprint will give you the green light to go live with one contract. Now that you're trading real money, the goal is to increase your account balance by $2,000 using everything that you've learned up to this point. Once you've accomplished that, the blueprint will give you the green light to add a second contract. Big difference is your first contract is funded with your startup capital, the money you use to fund your account. But by following the formula in the 24/20 blueprint, your second contract is funded with profit you earned in the market. Blueprint will always notify you when it's time to add another contract. Number 3, number 4, number 5, number 10, all the way to number 20. But you only add one at a time when it's time, and you only add profit you earned in the market. By recognizing the importance of aggressive risk management and the ability to adapt to changing market conditions and embracing the psychological growth that comes from handling stop-outs, traders can transform setbacks into opportunities for improvement. Embracing the stop out enables traders to refine their technique, enhance their risk management, and ultimately evolve as more resilient, disciplined, and successful in the dynamic world of these financial markets, whether you trade futures, stocks, crypto, forex, ETFs. Price flows the same across all markets and all time frames. Once you embrace that, you have a fighting chance at becoming the 1 out of 10. Without that knowledge, then there's a greater probability that you'll be the 9 out of 10. The passport itself doesn't guarantee you'll be the 1 out of 10, but it gives you a fighting chance. Because you have someone teaching you how to do the job every morning for 2 hours. You have around-the-clock support via Telegram. You have access to unlimited one-on-one mentoring. And you have a time-tested, battle-tested strategy and indicator set that's proven itself over the years. And as a lifetime member, you also have access to the Logic 247 alerts, the Concierge Trade alerts, the Thursday night members-only workshop, all that, and so much more. So now, hopefully the next time you get stopped out, rather than smashing your monitor, you'll understand what happened and why. Again, no one can know what's going to happen next in the market with 100% accuracy. However, once you develop an understanding of how price flows, how our strategy works, how to read the indicators, soon the stop out will just flow like water on a duck's back. Every morning you see it in the live training room. Michael gets stopped out. Does he whine? Does he lick his wounds? No. Because he knows that's a part of trading. He simply goes and looks for the next high probability, low risk trade opportunity. And hopefully you will learn to do the same. So here we have the daily chart. We got a 1 and a 2 and a 3 and a 4. We got a 5 times triple top here. Okay. Now, this new high put in on June 30th was 44.98. And this is at 44.97.75. So we're just one tick off. Difficult to get it exactly on point, but you can clearly see. Now, back here, we had a leg and a retracement, a leg and a retracement, and then we had a huge leg. At that point, the step line crossed from the left side to the right side of blue and climbing. And so if you go back to this day on our YouTube channel, June 20th, you'll hear us talk about, well, prices now on its way to pulling back to the BBC. That's the green line, stands for bull, bear, cross. When price is below it, we're bearish. When price is above it, we're bullish. Over here, we anticipate lower prices. Over here, we anticipate higher prices. And you'll notice that the pullback holds more often than it doesn't. Now, it looks like we've run up against a pretty good brick wall here. At this high, this new high put in back on Friday. The previous high was 44.93.75. And then we made it up, 4 points and change to 44.98. And then we basically had holiday trade here. So we're painting a red candle on the daily chart. Now, why do we look at the daily chart first? Some of you may not even trade the S&P, and you probably don't trade the daily chart. I trade the S&P, but I don't trade the daily chart, but I go to the daily chart so that I know what the institutional traders are up to. It's the institutions that actually move price because of their account size. Most institutions have accounts in the hundreds of millions, billions, even trillions of dollars. Hold on for me one moment, please. Okay, institutional traders look at daily, weekly, and monthly charts, the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Again, it has to do with account size. So by spending just 2 minutes with the daily chart of whatever market you trade, it gives you valuable information. See, if you're just looking at a 30-minute chart or a 5-minute chart or a tick chart or a range chart, you might not know that we've been up against this brick wall now for 4 sessions. That's valuable knowledge. Where would you expect the market to initially find support? At the step line. That's the black line. Below that, blue and climbing. Below that, the BBC. Now, while the pullback holds more often than not, we know that eventually it will trade through the BBC. That keeps the markets fluid and tradable. Hang on, guys. Michael, are you here? All right. He's going to be here in a minute, so I'm not going to get into much more. I'll just wait for him to show up.
Okay.
Are you ready?
I am ready. I'm here. I am ready. All right. Gary said no sound. I don't know what was going on with that.
Yeah, he's the only person that said that, so
Okay.
I'm thinking that's a Gary issue.
Okay. Well, here we go. He just logged off, so he's probably logging back on right now. All right.
Thank you, Martin.
All right. So here we go. Got it. Good afternoon, everyone. Today is Wednesday, the 5th day of July, 2023. Now, if you have not taken a free trial with us and you want to take a free trial with us, then go here to mytradingiq.com. Right here is where you sign up for the trial. Click on that. It's from 9:30 to 11:30 in the morning Eastern time. If you're going to do that, you should go to trading platforms and follow the instructions for whatever platforms you use. Okay. Now what you're going to see here is mostly TradingView. You're going to see TradingView and DT Pro. Those are the platforms that I use primarily. And you will see that stuff. Now the trades are actually taken from the TradingView platform, and the trading is done on the DT Pro platform for me. You should also go to the trade rules page here and look over the trade rules. If you are signing up for TradingView, or if you already have TradingView and you give us your username and you click on this right here, it will bring you up to this page right here. All right. If you have Pro Plus or higher, it will bring you to this page. If you have Pro, it will do these two charts. If you just have basic, it will do just the gold chart, right? But you can change the gold around to be whatever we want. The problem, if you just have the basic, you're not going to be able to do a 7 range. You'll only be able to do a 10 range. But you can still work with that. Yeah, we even have something in here. If you do a 10 range right here, your stop should be 15 ticks. It should straight or break even after 6 ticks in profit. Okay. All right. So the spreadsheet. Now we had a good day to start it off really good, and then it got kind of rough on me, but we ended up at the very end getting back to positive. So today, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 5th day of July, 2023. We made 27 ticks in the NQ, 13 ticks on the Russell. We lost 19 on gold, and we made 2 on the ES. That ended up putting us at plus 35. And we were actually, we were down 225 at like 10 after 11, and we managed to get that 225 plus 35, so 260 bucks in those last 20 minutes to get back to positive. But it only took us 12 minutes and 6 trades to get to the goal for the day. And at that point, we're up $770. That's $110 a contract is where we were. So we had 7 contracts, $770. And we took a bunch of trades today, 26 trades. So on the month now, we're up 285. That's over 2 days, averaging 142.50 per day. Now that is a low number for us, but it's still more than the goal, almost 1.5 times the goal for the day is what we're averaging. On the year, we've gotten our goal on 123 out of 126 days, and that puts us at $58,694, averaging $465 per contract per 2-hour trading day. Now, we don't actually trade the full 2 hours. We do training, and we did that this morning too. So if you were to quit trading when you get your goal for the day, and you would add 1 contract per month, so far this year, you would have only had to work 37.9 hours, and you would have averaged $1,696 per hour for those 37.9 hours. Okay. Let's get into the trades. Gold had my number today. I didn't trade a lot of it, but the 2 trades that I did take, if I would have taken this green arrow right here, that would have been okay. If I would have taken this green arrow instead of the black arrow, then that would have been okay. But I stopped out on that one to the tick, and then it went down and did something. It didn't do exactly what it should have done. It should have put in a lower swing, but it didn't do that until way over here. And we took this one here. Once it did put in the lower swing, we took this one right here, and that stopped us out. So at that point, we're at minus 20. Then we put in the lower swing, and we finally took this here, and we got 1 tick on that. And that almost made the lower swing, but not quite. We're looking for it to get down to this level, and it didn't. It did turn around and start moving up. It gave right here at the end of the session this morning, it gave a green arrow for a little bit of a long trade, but it didn't put in a higher swing, so it's just been choppy after that. Okay, so we ended up with minus 19 ticks on the gold today. The Russell was our high gainer. This is crude oil right now. We go to the Russell, not TY. And here. Okay, so the Russell was our big winner at one point today. But then I stopped out twice in a row, I think. Well, not twice in a row, but I stopped out twice. And it got closer back down toward the break even. All right, so right here, the first trade we took on the Russell, we picked up 1 tick. Then the next trade was right here. We picked up 10 ticks on that one. Not sure why I took this first trade. I think something's off on this. I had switched during the break. I had a meeting and I switched stuff around. But the first trade was 1 tick and the next trade was 10 ticks. It looks like, or maybe it was 3 ticks. I'm not sure what that's all about. But anyway, we got up to 21 ticks, and then we had a 1 tick trade to get us to 22 ticks, and then we had a 10 tick trade to get us to 32, then another 1 tick to get us to 33, and then we had our stop outs. We had right there a stop out in one direction, got us down to 23, and then a stop out in the other direction, got us down to 13, and that was where we ended it with the Russell on the morning session. I'm pretty sure that the context is not set right for the Russell right now. It's 0.01, it's pretty close. The sensitivity, there it is. So during the break, let's see, there was 1 short trade right here that didn't put in a lower swing. Looks like it gave about 10 ticks though, and another one over here that is still working right now that should put in a lower swing. Looks like it gave 7 to 10 ticks. And that was the Russell this morning. Okay, times at 12:54. The ES today, we didn't have a whole lot going on with the ES. We had this 1 trade right here was a break. I'm sorry, there was a +2 on that trade, and then it followed up with a break-even trade right here. That was it. This is the whole day on the ES, right here. This little bit. So not a whole lot going on the ES today. We do have FOMC meeting minutes coming out this afternoon, so that's probably why the ES is on hold. The NQ. Let's go back here. The NQ. Go all the way over here. Okay. So it took us a while to actually get some ground on the NQ to make some traction here, but the first trade was a break even. The next trade was just a +1. Then the next trade after that was a +4 to get us to 5. And somewhere in here we had, I didn't count this, whatever that was, and we had a break even right there, and then we had the -20, we had to stop out. So that put us at -15 because I didn't count whatever that was. That put us at -15 at this point. And let's see if we keep moving forward right here. We picked up 4 ticks to get us to -11. Then we should have another stop out. Yep, another stop out right here. And that put us down to -31. And then this was the last few trades here right at the end. I said between 11:10 and 11:25. We picked up all this right here. We went from, where were we on the NQ? -11, right? And we had stopped out there, we went to -31. Then right there we picked up 4 ticks to get us to -27. Then 30 ticks to get us to +3. Then 12 ticks to get us to +15, then a break even, and then 12 more ticks right there to get us to +27. And that was where we ended up with the NQ this morning. See a lot of no trade zones in here. I don't know, it wasn't really, it started out okay. The trading started out okay today, but it didn't end up being real easy. You can see in here we had, right here we had a green arrow, but the long-term direction was completely flat. Now this was a pullback to the ribbon after a trend change, so you could have taken this black arrow here, you could have taken this green arrow. This would have worked out just fine. This would have stopped you out. Direction change again, you're waiting for a pullback to the ribbon, you didn't get one. Direction change again, get back to the ribbon. Had a nice green arrow trade right there, and that was it. So the markets were a little tricky today. Now I want to point something out about tomorrow. Tomorrow morning, we we have news coming out. Well, today, first of all, today we have at 2 o'clock, we have FOMC meeting minutes. Now, it's high impact, and usually the meeting minutes, the meeting minutes is not the actual FOMC, but this could have an effect on the market because they're going to talk about stuff at this point. They're going to show what they were talking about, what made them consider the change or not in the last meeting, and to give an idea of what to expect for the next meeting. So this is going to be a big deal when it comes out at 2 o'clock, I think. And I don't know how that's going to play into the rest of the day because there's no press conference or anything like that goes along with it. But the thing I was going to show you was tomorrow morning at 8:15, we have ADP non-farm employment change. That's usually at 8:30. I'm not sure why they're having it at 8:15 tomorrow, and I don't know why they're having the challenge of job cuts at 7 or 7:30. That's, the scheduling of this is unusual. I just wanted to point that out because that's usually at 8:30 tomorrow. Then we have unemployment claims coming out and all this other stuff that's coming out tomorrow, regular times. Okay, so stuff is spread out starting at 8:15. We have stuff at 8:15, 8:30, 8:45, 9:45, 10, and then all the way to 11 where we have crude inventories coming out because of the holiday. The crude inventories are coming out at 11 tomorrow. We should have natural gas in here coming out at 10:30 too. It doesn't show that, but natural gas should be coming out at some point tomorrow too. Did they bump that a day? There it is. They did bump it to Friday. Okay, they bumped natural gas all the way to Friday. I guess they had too much news coming out tomorrow. I just want to point that out to you guys. The news events tomorrow are a little unusual, the schedule of them, all right? So if you have not taken a free trial with us, go here to mytradingiq.com for the free trial here. When you do that, go to trading platforms, give us the information we need to get the desktop running in front of you while you're on the trial. It's the best way to take the trial. Go to trade rules if you have trading and you've given us your ID. Go to trade rules, click on this, and that is going to bring up this right here for you. If you have Pro Plus, it'll bring this up. If you have Pro, it'll bring up these two charts. If you have the basic, it'll bring up this one. Okay, just so you know. Now we got to jump into the next session here that is starting. Let me get to that really quick. Dwayne, get to that really quick if you can. TradingView. Community, live streams. Okay, on to upcoming. Hopefully I'm getting to it in time. There it is, upcoming streams. Got it, okay. So it is 1 o'clock. It's not time for me to jump into the next session, the live stream in TradingView. Okay, and I'm about to jump over there right now. I hit share. Okay, so again, if you guys have not taken the free trial and you want to take the free trial, then go to mytradingiq.com and sign up for the free trial right there. Okay, so now we're going to run the live stream, do some more live trading here between 1 and 1:30 with the TradingView charts. Okay, so all right, so we just jumped into that. Now we are live on TradingView right now. Okay, that's all good. Everything looks to be going well there. All right. So I want to point out here, we did come off a lower swing right on the ES. It's pulling back up. It gave a black arrow right here, but pulling back up a little further to hit the ribbon. We're in the overbought right now. If we get a down close on this and it pops out of the overbought, it's going to give us a green arrow here on the ES. Now, I will take that trade if it happens. Set that trade. These are range bars, okay? What that means is every bar is the same size. This is a 16-tick range bar over here on the NQ, and all three of these other charts are 7-tick range bars. So because I know this bar has a high right here at 84.75, I know it's going to close, well, no, it's going to high right here at 85. I know it's going to close 7 ticks lower than that. Or because it has a low here, I know it's going to close 7 ticks higher than that, right? 83.75, so it's going to close up here. The highest you can get is right here at 85. And that's the highest you can get. So if I wanted to go long on an up close, I could put a buy stop limit order on 1 tick above that. But I don't want to do that because it's more setting up for a short than a long here. So I don't want to do that. But if that were the case, then that's what I would do. What I can do though, let me bring over my DOM and I'll show you what I can do right now. Because this has a high right here, and if it drops out of the overbought, it's going to give us a green arrow right now. Okay, so it's got a high of 85, so it would sell 83. Why sell 83? Because if it gives us a down close and it pulls out of the overbought, it's going to be a green arrow short trade. So the down close is going to happen right here at 83.25. I know that ahead of time. If it's going to close down, it's going to be here at 83.25. I know that ahead of time, right? Because these are range bars. So I can be proactive with my order and put it on there, knowing that if we get a down close at 83.25, I'm going to get filled here or probably here. Probably spread it out between the two of those because they have 7 contracts. Okay. Now let me slide this over here a little bit more. And come over here. And we'll wait for the down close here on the ES. Okay, we'll wait for that down close on the ES. And over here on the NQ, we want that to pull back down and test the ribbon. We had a direction change right here. So you want to have, with the direction change, you want to have a deep pullback before you take your first trade. You don't want to be a shallow pullback. Okay, gold just put in a lower swing. Now what we need here on the gold is for it to pull back up and touch the ribbon and gives a down close. Okay. We don't have anything that's really giving us a trade right now. The closest thing I do. The closest thing that we have, yeah, let me see, Martin, if I spread it out like this. There, I got to make it so that it's I can get to the top of it on this other screen, right? And I got to be able to get to the drawing tools over there. Oops, I didn't mean to do that. There, that's better. I got to be able to get to the drawing tools on the side. That's about all I can do with it right there. All right, so on the ES right now, we've got a high here of 85. We're still looking for the down close there. Over here on the gold, we needed to pull back. On the NQ, we didn't get a pullback down to the ribbon. We've got a black arrow here because we pulled out of the oversold. That's why we have the black arrow right in there. Okay, because we pulled out of the oversold. All right. Yeah, so we need this to get, well, we need to close down to give us a trade. If it closes up, we're probably not going to get a trade. I don't know for sure, because the thing that would disqualify the trade here would be this black line getting into the green color. All right, it's taking a really long time to develop. So while we wait for it to develop, why don't we go here and look at the trade rules really quick? Okay. So the rule that we're waiting to see happen right now is going to be a short trade right here with the slingshot. Right? The black line and the ribbon must be on top and in the red or the silver. So the black line is on top and it's in the red right now. Okay. The long-term direction for any trade, the long-term direction has got to be in favor, and it's got to come after a lower or a higher swing. So we're coming after a lower swing, and the long-term direction is bearish. The long-term direction is shown by these outer bands. They're going down and spread going down. That's bearish. This is your lower swing. So it's coming up, hit the ribbon. Long-term direction is bearish. We need the down close off the ribbon. Now it's with the slingshot right now because we're overbought. Right? It's with the slingshot because we're overbought. So if we get a down close right and it pulls out of there, then that would really make it with the slingshot and you get a green arrow. But if it doesn't pull out of there on a down close and the black line stays in the red, then it would be this rule right here: a short trade trail without a short trade sell without the slingshot. Okay, because it touched the ribbon and we had all that other stuff, but it did not drop through. Right? It did not drop through the overbought level. So it'd be this without the slingshot. Okay, that's looking at right now. Okay, so over here on the NQ, We wanted to pull back deeper, get down into the ribbon a little bit on the trend change. The ES, we're waiting for that to finish working. The Russell, we don't have any kind of a trend here. This should have put in a lower swing and it didn't. And the long-term direction is still bearish, but it's got to put in a lower swing before we're going to take a trade. On gold, we do have the long-term direction is bearish. We do have the lower swing. So if we look at these steps, not these steps up here, for all trades, we have that part and we have that part on the gold right now. But we don't have any of this. Okay, that's what we're waiting for. Now, while we wait for this, anybody that's in here that is watching in the live stream or anywhere, any of you guys know we're streaming in 3 different places right now. Anybody that wants to see anything else, if you want to see a crypto or a Forex, a stock, ETF, anything like that, just type in a symbol and let me know, and we will. Yeah. Adigua. Just tell me the symbol. What do you want to look at in Forex? Okay. Just give me a symbol you want to look at in Forex, and I will be happy to look at it with you. We've got a high here of 85. We're going to have a low. We have all 7 ticks range in this bar. Okay, so it's either going to close up and give us a trade, or it's going to close. I'm just going to close down and give us a trade. It's going to close up and give us no trade. Yes. All I need is a symbol. Type in a symbol and I'll be happy to go look at it. The Russell chart's not giving us anything right now. We'll go change that to be any kind of chart. I'll look at Forex over there. Okay. All right, so the gold, we need to pull back deeper. Still have nothing on the Russell, and the NQ just keeps going up. We need that deep pullback here on the NQ after the direction change. If you'd have taken either one of these black arrows, they both worked out okay. But, you know, after a direction change, I'd like to see a deep pullback, an actual bounce off of some sort of support. We're getting pretty close to our entry point here on the ES now. Okay, the fact that you could see the whole ES in like one screenshot for today kind of says how slow the ES has been. Right, watch the NQ. There it is on the ES. We got the down close and the trigger into the trade there on the ES. We got some slippage because we had a gap down right there. So we slipped a tick. So this needs to be right there, 10 ticks away. Okay, so now that we've done this part of it, okay, now that we've done this part, you see, this is actually not even a valid trade. Now that I've done this part, it's not even a valid trade because we didn't come out of the overbought. The black is not in the red, and we didn't come out of the overbought. So it's not even a valid trade here right now. The NQ is about to give us a valid trade, though. All right, if I get my NQ DOM running, then I will find that over here. The NQ is about to give us a valid trade. It didn't come out of the overbought either, but it's a ribbon trade is what it is. Now this is not a trade because the black was not in the red and we didn't come out of the overbought. If we would have come out of the overbought, it would have given us an arrow on that one. Now this one hit the ribbon. We didn't come out of the oversold, but it hit the ribbon. Okay, so this is an okay trade because the black is in the green. So that's an okay trade on the NQ. And here that is. Okay. And this is automated. So oh, good. Okay. All right, Mark, what's your email address? I had your thing ready to send to you. I guess I'll get it from right here. Okay. I'll send that link to you so we can meet. down. Okay, see my stop automatically bumped to +1 tick here on the NQ. And so what we anticipate the NQ is going to do is get up to here to 380. Now I have it automated because the NQ is usually so bouncy that it automates and bumps my stop to +1 tick after it gets 8 ticks profit. Okay, so we had just the 1 tick profit there on the NQ, and that was a ribbon trade. It wasn't the arrow trade, it was a ribbon trade. This bar right here, they hit the ribbon and gave the up close. Now, Dwayne, let me get back over here for a sec. Let me get back even further over here. Something else. Let me paste this in here. That is to you, Mark, and let me copy your email and put that in there too. There you go. Image. Right now, if I hadn't taken this trade, I'd be taking this green arrow trade right here. The green arrow trades are the highest probability trades, but I already took the trade from back here, and that should put in a higher swing from where I took the trade. So I'm not going to do anything else right now. Okay. Okay. And the Russell's not giving us anything. This is not even a valid trade here on the ES. I missed out. I shouldn't be in that trade. I'm going to get out of break even when I can. I had one chance to get out of break even a minute ago, but I didn't take it. The reason it's not a valid trade is because we didn't pull out of the overbought. All right. The black is not in the red, and we didn't pull out of the overbought. So it's going to turn into a valid trade in a minute. That's what I'm thinking. It's just taking its sweet time doing it. But the rules right here for the short, this will be a short without a slingshot. The black and the ribbon must be on top and in the red. This and in the red part is not met. That qualification is not met. Okay. All right. So we'll go back here now, and I'm going to change this to be. I don't make an invalid trade. Why don't I simply exit immediately? Well, I'm reducing my risk on it right now, Jack. Right. I'm only risking now 6 ticks on it. Okay. I think it's going to go down and give us the trade in a second here, Jack. That's why I'm not jumping on getting out of it with a huge loss, because I think we're going to get an arrow on this in a minute. If we get it down close on this bar, it's going to give us the arrow that we're looking for. Okay, see, I can get out right now. I can hit break even right now. And now I'm out of break even. But now I think what you're going to see here is this is going to close down. It's going to give us a down close. And we're going to have a green arrow, actually. Yeah, I know you are. All right, so I was looking here, the UDOW, Mark, you wanted to see UDOW. What is that symbol? I'll put it on here. Let me just, okay, so I'll go here and I'll do UDOW for all. UDOW prop share is this one right here. This is what you're looking at. Okay, so what you want to look at with this, you see how it's got the no trade zone and everything is blocked up in the trade zone. So you want to go here and you want to adjust the sensitivity on the no trade zone, something that suits this market, right? Now, usually you think 0.05 would work. We'll start with 0.01, something a little less sensitive. There you go. 0.01 seems to work pretty well. Okay, so let's look at that in a bigger picture right here. All right, so there's not a lot of volatility in this one. This is our whole day right here. Not a lot of volatility, and it hasn't triggered a single trade. Let's put that on. Now in here, should it have triggered a trade? It should have given a black arrow in here. Some reason why it didn't give a black arrow, and I'm not exactly sure what that is. Let's see if you set the sensitivity to even less. There it is. Okay, so it was looking, the black arrow was looking back here. The arrows are looking back here at something else. And here you see you have a green arrow here, a green arrow here. That removed all this, pretty much all the sensitivity on it. I'm not sure that that's a good thing though, because when it's flat like this, it should be in a no trade zone. Okay, so if we go down here and we adjust this a little bit, make it like 0.009, something like that. And that's a little better. That's what this looks like. Now it's really got no volatility. So you gotta give something that's got some sort of volatility in it, that's moving up and down quite a bit. Yes. All right, so the ES that finally did close down that bar, right? It was up at 85, finally did close down, and it did go into profit. This bar needs to close down now to pull this out of the overbought to give us the arrow. Okay, it's hitting the ribbon, so if it does do that, then there's a chance we get a green arrow short trade here. Now, this last one that we did over here on the NQ, you know, I took that long trade from this bar right here, and it never put in a higher swing. Something after that matters until you have a higher swing. Okay. Do you have another one? Roku. Roku, Jack says. What is it symbol for Roku? Is it just ROKU? I guess it is. Okay, and that's 64 bucks. So let's blow this up and see. Let me set the context on that. And it's pretty good right where it is. It looks like it's all right. In here, the long-term direction is bullish. Not really coming off a higher swing, but seems like it should give us an arrow right in here. I don't know why the sensitivity seems like it's off in here. Let me check something. Let me get rid of that and go here. Make sure it's not something that I was working on. Go down here and put this down to 0.01. Let's see. There it is. So it was probably something that I was working on. So in here, you know, we came out of the overbought. Over here, came out of the oversold. Long-term direction is bullish. See right here, it came off the ribbon right here. So this would have been a long trade with the ribbon. Right? It didn't come out of the oversold, so you wouldn't have had a trade there, but it would have been a ribbon trade right there, Jack. Okay. And the ES hasn't closed down on this one. So it's 120. So far we have one profitable NQ trade, one accidental break even trade on the ES. And I'm gonna go look at that other symbol again, the UDOW, because I accidentally had a context that I am doing some work on that was in there. There it is. So the UDOW, it's giving some black arrows and green arrows and all the arrows where they should be now. All right, another symbol, anybody? Anybody? QBTS. QBTS. All right, I don't know how much volatility you're going to get in this, and this is a really low price stock. Let's see. Well, for a really low price stock, it's given everything where it should give it. You know, I don't know if it's not showing anything in there for the no trade zone, so the sensitivity is probably needs to increase, needs to be a little more conservative than what it is. I'll do 0.05. We'll try. Well, 0.05 knocked out all the trades, but it's not showing a no trade zone anywhere. I don't know why. It seems like it should be showing no trade zone in here somewhere. Maybe I don't have that set. I probably don't. Now let me put this new one on. Okay, let's go look at that. No trade zone. There it is. So that's what it looks like in here. Yeah. If you're trading, if you're trading a whole bunch of them, then this is a 7-tick range. So let's make it something that's easier to calculate on. We'll make it a 10 range. Okay, so every bar is a dime. So if you have $1,000 on there, it's $100 $100 a bar. Okay, so you'd be shorting right here, green arrow, and it's $100 a bar, moving all the way down here. Okay, and your risk is only going to be like a little more than $100, like $120. And what do you expect when you get into a trade? You expect it's going to hit the prior swing high, right? So you can trade whatever you want, this stuff, whatever you want. It's having volatility is a good thing, though. Get something that's got some volatility is a good thing. Is that a symbol, Bart? Is that a symbol you want me to take a look at? Here. It's got a lot of no trade zone going right there. Probably need to adjust the sensitivity on this because it's got a whole bunch of no trade zone going. All right, so the ES, the trade never really came together the way that we wanted it to. I ended up getting out of that other one at break even. It never gave the down close, it gave us the arrow like I was hoping for. The NQ needs to put in a higher swing. It still hasn't. The gold hasn't pulled all the way back up and hit the ribbon. Let's see. Back in the day, Jack. Used to have flat rates, and then they had per share rates, all that stuff. All right, it's 1:24, guys. We only have about 6 minutes left in here. We haven't been able to do much today because the markets just haven't given it up. We want the NQ to get up above this level right here. We went long on the bounce off the ribbon back here. We ended up with a break even on it. And was it break even or one tick break even, I think. Or one tick, it was a one tick trade, I think. And over here on the ES, we accidentally took a short. We ended up getting a break even on that. The gold, we're looking for it to pull back. We looked at a couple of the symbols in here. If you guys have any more symbols you want to look at, just type them in and let me know. Okay. Let me go here and see if anybody's typing anything else. BTC USD. Okay. Okay. Yep. Okay. All right. Let's. Okay. So GBP USD. All right. So with Forex, you got to set the sensitivity a little bit different in here. All right. I'm gonna blow it up like this. You see when it's all red like this, that means the no trade zone is not giving you any trades. So because of the number of decimal places here with Forex, you got to set the sensitivity a little bit different. You have to put in more of these and see what that does. Okay, so there you have it. And this right now is on a 10 range. You know, depending on what the price is, 10 range may be too much or too little. But with Forex, 10 range, you're dealing with a spread, so you probably want to do something bigger. Okay, like this. So now every bar is 50 pips. Okay, so this is what it looks like on the pound so far for this morning with the USD pound. You got a long trade there, a short trade here, and you have nothing right in here. And that's what that one looked like. Okay. It's all the same stuff. It's just all you have to do is figure out how to set the sensitivity, and that's we'll teach you how to do all that stuff. Again, I haven't even said this yet. If you haven't taken a free trial with us, go to mytradingiq.com and sign up for the free trial. Let's see, that mytradingiq.com is right here. The homepage at mytradingiq.com is right here. Just click on that, sign up for the free trial. All yeah, this stuff works on everything. So you just have to pick whatever it is you want to trade. So right here, the GBP USD, you want to look at Bitcoin too, right? That was, what was it? BTC. Just straight BTC USD. This right here. And you see all the same stuff. Now with Bitcoin being such a high flyer, you probably want to do it on a little bigger time frame. Okay, with the price the way that it is. So each bar in here is $100, is $1, or in this case it's $10, I think, or something like that. Is it 766 down to 6? It should be 666. Okay, whatever. It's 100 ticks. But you see, you have a sell, a sell, a sell, a sell that didn't put in a lower swing, so you wouldn't do the second one. Over here, a buy, a buy, a buy. And that was the last couple of days, really. Right? That was yesterday. This is today. So today is right here. If you want to see on a smaller time frame to get more trades, just bump down to like a 50. And you have more trades. This is today now on a smaller time frame. Okay. Again, if you haven't taken a free trial with us, go to mytradingiq.com, sign up for the free trial there. The only way you're going to get access to these indicators is to sign up for the free trial. Right? There's no other way to get access for the indicators. And when you sign up for the free trial, it's there's no credit card or anything like that. If you click on this link right here, this is what it brings up to. This. Right? So you just got to fill in this stuff. No credit card. You hit register. No credit card in here anywhere. If you have TradingView, give us your TradingView name right here while you sign up for it. That way we can set you up right away. As soon as we see that you signed up for the trial, we can set you up. Okay, if you're going to sign up for the trial. That's the way to do it. This is for NinjaTrader. If you have NinjaTrader, give us your machine ID. If you have NinjaTrader, you should also do the TradingView. All right. If you have NinjaTrader and you like to trade on Ninja and you want to use your DOM in Ninja, that's all great. But sign up for TradingView too. All right, it'll be worth your while. And yeah, to do all that, go here to mytradingiq.com, click on trading platforms. This is where you get information for the different platforms. All right. So this is TradingView right here. Watch that little video. It's like a 3-minute video. I need to update those videos. Think about it. But yeah, so it's 1:30, guys. I got to wrap it up. I have another meeting coming up here, and I'm just going to try to schedule a whole bunch of meetings today. But I know I have enough right now. So it is 1:30, and it's time for me to wrap it up for today. So you got to see different charts in here, different things. One of the other ones we can look at is crude oil right here. Now, we used to watch crude almost every day. We'd watch crude. They've gotten off of crude a little bit because when they were rolling over about a month ago, they were rolling over and I went to the Russell and I really got to like the Russell again. Russell was giving a lot more trades than crude was. So I kind of stuck with the Russell, but you can see all the same stuff is working here with crude oil too. Okay. Again and again and again. All right. So I guess I'll wrap it up by saying, if you haven't taken a free trial, go to mytradingiq.com, sign up for the free trial. It's on the home page right here. Click that button. All right. Click that, fill out this form, and we sent everything you need into the room. If you're going to take the trial, sign up for the indicators. All right. Go to trading platform and give us all the information we need to get your platform running in front of you. All right. With that, I'm going to wrap up this live session. Go and pass it back out to you, Dwayne. Fabulous Phoenix, Arizona. Studio A, overlooking South Mountain, America's largest city park.
Okie doke. Recap of the morning session.
Today it took 12 minutes and 6 trades to get to $770.
Good job.
Okay.
Assume there was a couple stop outs along the way.
Oh yeah, yeah, there were. Yeah, well, it was after that we got a bunch of stop outs.
That was the topic of today's episodes. Get stopped out much?
Yeah. Oh, yeah, definitely did.
So we talked about it for about 10, 15 minutes. Okay.
Good. Well, today was a good example of it.
All right. With that, guys, we'll keep plugging along. First thing we're going to do is announce our tweet of the day. And Hank at GC Capital LLC is our winner of the day. Breaking news, the plot thickens on cocaine found at the White House. In a startling development, new information has emerged regarding the cocaine found at the White House. The bag was reportedly discovered in the library, a room where Hunter Biden is known to have used his laptop. The Secret Service allegedly assumed the cocaine belonged to Hunter, but no fingerprints were collected from the bag. The White House Library is under 24/7 video surveillance, suggesting that the Secret Service likely knows who left the cocaine in the room. Is this a case of a forgotten stash, or is there a more clandestine narrative unfolding behind the scenes? Well, here's my take. An addict will make sure that they always got a little bit of stash wherever they're going to be. They don't ever want to be caught in withdrawal, the sweats, etc. So, the substance found is actually cocaine hydrochloride. Well, that's what cocaine is. And you know, I wish the guy all the best. I hope he gets the treatment that he needs, that every person deserves. I want nothing more than that for him. So, that was our tweet of the day, which now brings us to Logic 247. That is our 24/7 around-the-clock E-mini alert service. Now, the Logic 247 alerts are not just the E-minis, but also crude, gold, silver, euro, bonds, even soybeans. Over the last 257 weeks, we've issued over 14,600 individual handcrafted alerts. Since the markets opened this week, Sunday night, now we had a holiday in there, of course, a Tuesday, which is a little unusual, but happens sometimes at Christmas. Since the markets opened this week, we've issued 34 alerts. 7 have triggered. Still waiting on the outcome of 13. 14 actionable alerts, of which 5, or 36%, would have been stopped out based on not risking more than $300 per contract per trade, less when possible based on market structure, and a simple process I teach all of our lifetime members in their unlimited one-on-one mentoring sessions. Now, over the last 257 weeks and over 14,600 individual handcrafted alerts, we've averaged 20% or less of the alerts being stopped out based on that risk profile I just gave you. Last week, we were at 19% at the end of the week. When all was said and done and the dust settled, we got off to a shaky start. This week, we're sitting at 36%. That's pretty shaky, but we still got the rest of the day and Thursday and Friday. See if we can't get that down to or below the average. The average is 20% or below. And that's over 257 weeks, 14,600 plus individual alerts. Okay. Now, here's a caveat. Never risk more than the potential profit in a trade. If an alert only offers $100 of potential profit or $200 of potential profit, then your risk should be commensurate. If an alert has a potential $1,000 of profit or $2,000 of profit, you still don't want to risk more than $300 per contract trade. Now, each alert has an initial target designed to help you get your goal for the day. So even if the alert from the entry to the final target, if there's $2,000 of potential profit, but you know you're going to get out at the initial target, then that's all you should risk. Okay? If you risk more than the potential profit, it's bad math, bad science, and eventually it will cause you many problems. Okay? Now, the logic alerts are based on current price action, but they're issued well in advance of them triggering, because they're not done so you can just trade the alerts without having to learn how to trade. You know, there's always going to be somebody that does that, but there'll come a day that they regret that they didn't take the opportunity to actually learn how to trade. It is an extremely valuable life skill. You'll notice we're not teaching you how to trade any one specific market. We're teaching you how to trade. Once you learn how price flows across all markets and time frames, you can trade anything, anywhere, anytime. Futures, individual stocks, crypto, forex, ETFs, doesn't matter. The key is learning how to trade. And unless you have someone to actually teach you how to trade, then the statistics of success are pretty dismal, as stated by Futures Magazine in an article way back in 2006. And you know what? Not only has no one disputed that, they say it's actually gotten worse. Why is that? Well, if you do a little Googling, you'll find hundreds of thousands of places where you can buy indicators and oscillators and join chat rooms. But rare is the place where you get 2 hours of live group training every day in an interactive environment where you can ask questions, unlimited one-on-one mentoring, round-the-clock support. If you find it, good luck. In fact, if you find it, I'd like to know about it, because as far as I know, we're the only ones that offer it. So, anyway, when Michael and I set out to conquer this beast, this world of trading, we saw all the things that were wrong and broken in the industry. We made a commitment together that someday, once God showed us the way, that we would build a place, a family-friendly place, where people could come and not be taken advantage of, but actually learn how to trade. And when your plan actually comes to fruition, and you know that you're following what God wanted you to do. If every time you put your hand to something fails, probably outside of God's will for your life. So what do? Talk to Him. Ask Him. Let Him show you. Remember, He created you for a purpose and a reason. You're not here on planet Earth by accident, and you're not listening to this broadcast live or after the fact by accident. No member, no lifetime member is a member by accident, but by divine appointment. Now, the way to use the logic alerts is when the alert comes out, you study the alert, and then you go to the 30-minute chart of that particular alert, and you look for the window of opportunity that the alert represents. If you repeat that process enough times, pretty soon you'll start spotting the windows of opportunity before I even have time to post the alert. So when an alert comes out, it's not like you got to race to your computer and try to get the trade on. No. I intentionally build in time for you to get it, study it, understand it, learn from it, so that eventually you'll no longer need anyone to tell you when to get in or when to get out. Because the purest form of information you can get is from the chart itself. So we're going to teach you how to let the chart tell you when to get in and when to get out. Okay? Now, our other alert service, the concierge trade alerts. They're different in a couple of different ways. Hold on for me just 1 second. I'll be right back. Okie doke, I am back. So we were just starting to talk about the concierge trade alerts and how they differ from the Logic 247 alerts. Well, they differ in a couple different ways. Number one, they're not based on current price action. They're actually based on historic price action. And when current price action meets historic price action, that's where you'll find some of your best high probability, low risk trade opportunities. This report is published as a static report shortly after the Globex open each evening, Sunday through Thursday. Now, today's the Wednesday session. The Wednesday session will end today at 5 p.m. Eastern. The markets will go quiet for an hour, and then at 6 p.m. Eastern, the Thursday session will begin, even though it's still Wednesday night here in the U.S. So last night, the Wednesday session began at 6 p.m. Eastern. I got the report out at 6:35 p.m. So what do? We cover all the same markets in both places, but you more than likely only trade one market, maybe two. I don't know, depends on how long you've been with us. You may just trade wherever there's opportunity, but we'll focus on the ES just because it's the most popular. The first thing you do when this report comes out and you're notified and you have access to it in the appropriate Telegram channel, make note of where price is at this time. It will always be between these two numbers. Then draw a line in the sand at the long target, line in the sand at the short target. Price gets above the 30-minute BBC. When we were looking at the daily chart, I showed you that green line, bull, bear, cross. Okay. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. It's that simple. You still have to look left to spot potential obstacles. That would be previous swing highs or swing lows, which can become current resistance or support. And you learn over time how price behaves at a weekly trading zone. Price is always trying to reach a weekly trading zone from the moment the markets open Sunday night till they close Friday afternoon. If price is above the 30-minute BBC, it's trying to get to the zone overhead. price is below the 30-minute BBC, it's trying to get to the zone below. Now, again, I know that sounds pretty simple. Here's the tough part. Resisting the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Now, all members and trial members got these numbers last night at 6:35 p.m. Eastern. But because this broadcast is open to the public, some of you did not get these numbers. So if you want to grab a quick screenshot or just jot down the numbers of markets that you have an interest in, by all means, please do. Okay. And then we'll go to the charts. We've already looked at and talked about the daily chart and the Fibonacci price extensions. Well, of course, this high represents the most recent high put in last Friday, 44.98. The low is the low put in on October 13th. We're in a downtrend for over a year. The low came in October 13th of last year. So from October 13th to here, the 24% fib retracement would be right here. The 38%, the 50, the 62. Okay. Now, but price seems to want to go higher. What do? You use this tool, Fibonacci price extensions. It's the same 13th century math, just applied a slightly different way. From the most recent significant swing low on the daily chart, I connected that low to this high to this retracement low. And you say, but wait, this high is higher. Yes, but it hasn't had a chance to retrace yet. Once we retrace back to the BBC, then we'll connect this low to this high. Okay? But first, price has to pull back. Now, we know where resistance is overhead. 1, 2, 3, 4, 5 sessions. Where's support? The daily step line, blue and climbing, the BBC. Price always reverts to the mean. In our case, the mean is green and we call it the BBC. Bullish above it, bearish below it. Pretty simple. Bull, bear, cross. Okay? So, by spending 2 minutes with the daily chart of whatever market you trade, it allows you to see things you can't see on your smaller time frames where you actually execute trades. So you want to have this big picture view. Really important. On your little notepad, you can notate where you should expect resistance. You should anticipate support. Since we've already pierced the step line once today, then the low of today would be potential support. And then just below that, blue and climbing. If we get through blue and climbing, then the low of this day, the low of this day. By then, we're already back to the BBC. And while the pullback holds more often than it doesn't, we know eventually price will trade through the BBC. Pull back, hold back, hold back, pull back, pull back, pull back. They hold. Pull back, pull back, pull back, pull back. See how it holds more often than not? So whether you're on the daily or the 30-minute chart. So if price were to drop like a rock right now, we would expect price to hold here. And when the Fed minutes come out this afternoon, as Michael was discussing earlier, there's going to be question. Well, there won't be a press conference today, but we will have full disclosure of everything that was discussed during the Fed meeting that led to the Fed announcement, which led to the press conference. Okay, so I highly encourage you at 2 p.m. Eastern, put your mouse away. In fact, that's about 7 minutes from now. So let's go ahead and get through this. Remember, we don't trade news. We wait for the markets to absorb the news, and then when the normal rhythm returns, that's when we want to trade. The vertical line right here separates today, Wednesday, from Tuesday, from Monday. If I scroll back, you'd see Friday. Okay, so the market opened last night, and it made a little move to the downside. But as you can see, remember I talked about you got to look left to see where there's potential support. And look at that. Look at the horizontal line on my cursor. From this low to this low. Identical. Identical, 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 until that's broken. Okay? And we have what I call the perfect stack. Price, step line, red and falling, ABC. So price dropped right to the short target, caught a bounce, came back to the short target, caught a bounce, came back to the short target, caught a bounce, came back to the short target. Once we got below the target, you can see that we traded all the way down to the weekly zone. When price drops to a weekly zone, we expect support. And that's what we got. In fact, when red and falling turned to blue and climbing, we knew that price was going to attempt to pull back to the BBC. And even though this pullback held, all these other pullbacks held, we know eventually this pullback held, we know eventually we'll trade through it. And that happened this morning at the Wall Street Open. Okay? And we traded up to here. Now, why did price stop here? Seems like an odd place, unless you know how to read the charts. That high was established early in the session. Had it gone a little higher, or even a little higher, or even a little higher, those are all areas that you would expect resistance. Now that we've pulled back to the BBC, pullback is held. If you let price get above blue and climbing. Now, notice on the way up, you had that perfect stack. Price, step line, blue and climbing. Okay. Once the step line crosses blue and climbing, that tells us to expect a pull back to the BBC, which we got. But now that blue and climbing is directly above price, it could be potential resistance because it's on its way to becoming red and falling. Now, we don't know for a fact yet that it's going to turn to red and falling, but there is a high probability that if price gets up above this triple top here on the 30-minute chart, that it will find resistance here. Might spike through it a little bit, but more than likely it will be resistance. Now, if price can truly get above blue and climbing, then you got a little area here where you could pick off your goal for the day. Oh, 44.89, 44. Yeah, let's make it 44.88. 44.48 to 44.90. Or you could be more conservative and wait for price to get above this high, and then you could trade this area right here. $95 to $97. That would give you your goal for the day. In fact, I think there's a logic alert out there. And then once you get above that target, expect resistance here. And once you take out that high and you've got wide open spaces up to here. But don't lose touch with the fact that 44.98 has been basically the high for the last 5 trading sessions. So it's got to break that on the daily chart before price can get to 45.07, which is the next weekly zone overhead. 45.06/07 and 45.32. And then the highest zone for the week, 46.13/14. Now, when the zones are published Monday morning at 6:15 a.m. Eastern, and we've published the zones since December 14th of 2009, we're not expecting price to hit the highest zone or to hit the lowest zone. We're creating a playing field for the week. Imagine you're at a football game sitting on the 50-yard line. You look left, you got the 40, the 30, the 20, the 10-yard line, then the goal. To the right, same thing, 40, 30, 20, 10, right? So what we're saying when we publish the zones is that each zone, if price drops to it, expect support. If price rallies up to it, expect resistance. It's pretty simple. Okay. So, while this is a possibility, it's not really what I would call a low risk probability. In fact, I'd much rather see you wait for this. But do not forget, $44.98. That's right there. That's the high put in last Friday, Monday, Tuesday. Today's Wednesday. See how important that is? On your range chart or your tick chart or your 5-minute chart, you're not going to see that. So on our YouTube channel, youtube.com/CFRN, you can go there and you can scroll back. I think it was a couple weeks ago. The topic of the daily episode was why multiple time frames are important. First, you learn to observe multiple time frames, and then you actually begin to think in multiple time frames. And that's a part of your training process when you become a lifetime member. Okay? So notice how price reached up and, as I expected, found resistance. I'm not saying it can't punch through it, but I instinctively knew that there was potential resistance there. That's the sort of thing you're going to learn. You're never going to know with 100% accuracy what the next high probability move is. Maybe I just got lucky that time. Or maybe I've seen it happen 10,000 times since 2005. So where's price headed? Well, it found resistance. When price finds resistance, it's always going to look for support. Step line. Below that, EBC. Below that, previous swing low. You also have a bullish crosshair. Okay, but that's already been traded through with this candle. So I would focus on the low of this candle as potential support. Now, if price drops through the BBC, because remember, this could be major resistance. If price drops below the BBC, oh, what a nice window of opportunity we have down here. 44.77 down to 44.73. That's 4 points. It's $200 per contract traded. Once you've earned the right to trade 10 contracts, then that's worth $2 grand. Okay. But you don't start out trading 10 contracts. You start out in the demo account until you put together 10 consecutive days in a row. You reach your goal in 10 trades or less. Then the blueprint will give you the green light to go live. I explained all that earlier. If you missed it, go to youtube.com/CFRN about an hour after this broadcast ends, and the video will be archived there for you. All right, ES to the Dow. The vertical line again separates today, Wednesday, from Tuesday, from Monday, from Friday. Okay. Now back on Friday, there was a different set of weekly trading zones. The zones come out Monday morning at 6:15 a.m. Eastern. And what happened when price dropped to the zone? It found support. It couldn't get to this zone because it couldn't take out that high. It's that simple. We opened last night below. We got slightly above, but we just rolled right over and dropped like a rock to the zone where we found support, and the market bounced up looking for resistance, which it found at the step line. And we dropped to the zone again, and eventually we traded through the zone and hit the short target. And then price stopped here. Why? It's right there. You're going like, but wait a minute, that's Friday. And the zones changed on Monday. Okay, I'm not talking about zones right now. I'm talking about price. No matter what market or time frame you trade, the clock on the wall is always price. Okay? Price tried to go lower here, and it couldn't. Price tried to go lower here, but it ran into the same support that it ran into last Friday. That process repeats itself over and over again and again, day after day. And the good news is once you learn our simple strategy and how to use our very simple set of indicators, nobody can ever take that away from you. You have a valuable life skill that has the potential to earn an above average income and the freedom to live, work, and play anywhere in the world that has a robust internet connection. Plus, it gives you lots of free time to spend with your family, pursue your passions, pursue the ministry that God created you for. And you say, well, I'm not a minister. No, but God created you for a divine purpose. You don't know what it is? Ask Him. Then listen. Maybe you want to be a Hollywood movie star. Maybe that's not why God created you. So you got to listen. You got to ask. And then you got to, if you've got 10 minutes to devote to prayer, talk for 1 minute, listen for 9. In current culture, that's referred to as mindfulness. Call it what you want, okay? God gave us 2 ears and 1 mouth for a reason. I'm sure you've heard that before. So price is kind of snarled up here. Okay, we got below the zone and we shot above the zone, but we ran into trouble. Where? Right at the swing high, just shy of the bearish cross. Okay, institutional traders saw the writing on the wall. Boom, back down to the short target again. And then we bounce up to what? Resistance at the zone and blue and climbing. See, blue and climbing is now direct. First you had a perfect stack. Price, step line, blue and climbing. But then that's changed. Blue and climbing is now directly above price, acting as resistance. And unless price breaks through, this is what's going to happen. Blue and climbing is going to turn to red and falling. And just as being above the BBC is an indication or expectation of higher prices, blue and climbing is an expectation of higher prices, while red and falling is an expectation of lower prices. Okay. And remember, this was Friday. That was last week's zones. You're looking here at this week's zones: Monday, Tuesday, Wednesday. Okay. Unusual week because we had a holiday on a Tuesday, but it is what it is. Let's go to the Russell. We opened below the BBC. We never truly got above because these candles are still touching. So the long target was never even a thought. We only think long when price is trading above the BBC without touching it. That never happened. In fact, price got below the BBC, blue and climbing, turned to red and falling, and that took us right down to the weekly trading zone, where we consolidated for 1, 2, 3, 4, 5 30-minute candles. 2.5 hours. And then we dropped to the target, end of the zone. And what did we find at the zone? Support, 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 support. Now when the market finds support, it's going to go look for resistance. Pull back to the BBC holds more often than not. So the market found resistance, it once again went looking for support. Well, why here? See this? The dynamic never changes. It's a fundamental principle upon which markets operate. Those principles have been in place since the inception of the markets, and they'll remain in place till the markets cease to exist. In Q, market opens here, drops to the target, drops to the zone, finds support. It's in a nice little double bottom. Red and falling turns to blue and climbing, and we rally all the way up to the long target and the zone, where we find, surprise, resistance. Price drops to a zone, expect support until proven otherwise. Price rallies up to a zone, expect resistance until proven otherwise. Okay. Price pulled back, but blue and climbing got above. So what was your friend on the way up now is an obstacle to a long trade. There's probably a logic 247 alert for something like this out there. Now the initial target on every alert is designed to get your goal for the day, which is $100 per contract traded. The NQ, because of its volatility, the initial target is worth $200 per contract traded, because you have to risk more because of the volatility. Okay. So we pull back to the BBC, we bounced, but we have an obstacle overhead. So the market has to sort itself out. So to try trading the NQ right now, well, why? Price flow is the same across all markets and all time frames. Go find a market that has opportunity. Or wait, you know. Crude oil. Market open, came down to the zone, found support, consolidated. Only three things happen at a zone. Consolidation is what you'll see 70% of the time. That's this. 20% of the time, you'll see rejection. When the 30-minute candle closes, the only thing left touching the zone is the wick. Okay. Price dropped to the zone, found support, went looking for resistance, found it at the zone. Once the market finds resistance, it's going to go look for support. So we got a little consolidation, and price attempted the zone below. Now, the zone is 69.55/60. The swing low was 69. Okay, so we missed it by a few ticks. Once price gets back above and climbing and back above the BBC, there's your perfect stack, zone to zone. Now, I'm showing you huge moves that happen on a daily basis, even on a sort of a quiet sideways day like today. But remember, you only need to make $100 per contract, whether you're trading crude, gold, silver, euro, bonds, S&P. Because when the blueprint tells you to add a second contract, now you're making $200 a day. And once you've earned the right to trade 5 contracts, the same 2 points in the ES, or 10 ticks in crude, or 10 ticks in gold, now that's $500 a day. And as you continue to earn your way up the ladder with profit you earned in the market, remember, only the first contract is where you're using your startup funds, your risk capital. Okay. As soon as you get the green light to add the second contract, you're now trading off profit you earned in the market. Just don't put the cart before the horse. Some people have a problem because they've been losing money and buying garbage for 10 years. So it would be humiliating to trade in a demo account. Okay, if you want to keep losing money, I can't stop you. But I can instruct you and help you to stop bleeding out. Remember, the zones come out Monday morning, 6:15 a.m. Eastern, since December 14th of 2009. From support, market's going to go look for resistance. Now, I said 3 things can happen at a zone. Consolidations most likely. Rejection 20% of the time. 70%, 20%, 10% of the time. Price will trade through the zone on the 30-minute chart like it's not even there. When it runs out of steam, it will typically retrace to the zone it sliced through. And remember, this zone is $70.95/$71. And then continue in the direction of the slice. And look how every time we pull back to the BBC, the pullback held. Even when we spike it and find support at the zone, that pullback held. You never had a candle open or close below. These are all things you'll learn over time. And then you'll question, man, why did I make things so hard on myself? We all did. We all fell for the lies that that litter the internet. Overnight riches, get rich quick, blah, blah. It's not reality. There is no holy grail. It doesn't matter. You can Google till your fingers bleed. Oh, and you'll find websites that promise you the moon. But as you know, you sit through the pre-sales video, and then you finally, the day comes for the big reveal. Man, you can't type in those credit card numbers fast enough, because it looks like what that guy did was magic. Okay, I don't have any magic. I just have what I call logic or common sense, based upon how price flows across all markets and all time frames. That's why I encourage people who are new to the world of CFRN, watching us today or this week doesn't tell you who we really are. Scroll back 6 weeks, 6 months, a year, 2 years, even more. You'll quickly see the thread of connectivity, the thread of continuity woven through each and every daily broadcast. And again, these huge moves, you don't need the whole move to reach your goal for the day. I'm just showing you what the market did. Support. Trade it through. Pull back. Continue in the direction of the slice. Pull back to the zone. Price drops to a zone. We expect support. And we got it. Now, why'd price stop here? Because we had a bearish cross right here on June 22nd. I know today's July 5th, but what happened on June 22nd is obviously pretty doggone important. You'll understand the value of that knowledge over time. Won't happen overnight. Market opens, consolidates, reaches down to the short target, gets above the BBC and above the zone. Okay, we sliced, pulled back to the zone, continued in the direction of the slice, pull back to the BBC, the pullback held, and we found resistance at the zone. And now we're about to hit the zone where we expect to find support. Why did price stop here? Bullish cross. It was approaching it. So, wise traders hit it up. Now they're letting it take its natural course right down to the zone. Silver. Market open, down we go to the short target, get above the BBC, hit the long target, currently pulling back to the BBC, but blue and climbing, our friend on the way up, and red and falling, our friend on the way down. Blue and climbing is now directly above price, so that's most likely resistance. So you got support here, the zone and the BBC. Price were to trade through the BBC this time, then expect support right here where the previous bullish cross took place. Euro. We opened below the BBC. pull back to the BBC, which we expect to be resistance, and it was. And so it sent us to here, bounced up to the zone, resistance, 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 support. Just traded through the short target. We hit it, bounced off the zone. Now we're trading through the zone. Here's the next zone. You got to go left to find the areas of potential support. Which brings us back to the daily chart, where we are printing a red candle. If we close below the step line, remember, blue and climbing is potential support as it's directly below price. Price trades through blue and climbing, and these two little lows right here are potential support, and then you're back to the BBC. And the pullback holds more often than not on the daily and on the 3-minute. To become a lifetime member, go to eminifuturestrading.com. Right here. Couple mouse clicks, lifetime member. No fine print. No upsells. No nonsense. No recurring fees. You don't have to re-up every 6 months, every year. No. Everything a trader needs, all under one roof, one low price. You pay once for a lifetime membership. There's self-appointed gurus out there who charge more for an hour of their time than we charge for lifetime membership. And you know what? Some people think because it costs more, it must be better. Well, you've probably learned the hard way. That's just not true. So, anyway, hopefully you'll never become one of these guys. Passport at least gives you a fighting chance to become one of these guys. 2 hours of live training every trading day. Unlimited one-on-one private mentoring. Strategy and the indicators are fluid across all markets and all time frames. As a passport holder, you get the Logic 247 alerts, you get the concierge trade alerts, and you get to go to the Thursday night members only workshop. Everything a trader needs, all under one roof, one low price. If you have any questions, you can call Valerie, 949-42-EMINI. She's very nice. She'd be happy to answer your questions. You can email support@cfrn.net. And when you become a passport holder, you will have around-the-clock support via Telegram. You'll be able to rub shoulders and hang out with our traders. In fact, you do that even on the trial, because we don't have anything to hide. Transparent with everything we do. Trade in front of you, put the alerts out way before they trigger. Can't be much more transparent than that. And that's something that was sorely lacking in the industry. I mean, think about it. About every 2 or 3 months, you'll get an email from some trading firm boasting about this huge move they had. Or you'll get an email about this killer forecast they made for the week. One for the week. Anyway, if you've had enough, if you're sick and tired of being sick and tired, just go here and get well. All right, let's wrap it up with a good word for the day. 3 days. Topic: God is calling you. Today's topic: Cock-a-doodle-doo. Luke 22:60. While he was still speaking, a rooster crowed. The Bible says, while he was still speaking, a rooster crowed. The Lord turned and looked at Peter. And Peter remembered the word of the Lord, how he had told him, before the rooster crows today, you will deny me 3 times. And he went out and wept bitterly. It's Luke 22:60 through 62. Before God entrusts you with a great assignment, he will permit Satan to test you. Why? To reveal your weaknesses and strengthen you in those areas. God will allow you to fail in a smaller sphere to keep you from messing up in a larger one, hurting not only yourself but others too. One of the wonders of the Christian life is that Jesus can take rubble and build something beautiful out of it. Peter promised never to deny Jesus. But by the time the rooster crowed, he had done it 3 times, just like Jesus said. Repeated failure. Can you relate? Can you say you won't lose your temper, but you did? Cock-a-doodle-doo. You said you wouldn't give in to temptation, but you did. Cock-a-doodle-doo. When does a rooster crow? Early in the morning. But I have good news. That means the rooster announces the beginning of a brand new day. After his worst night of failure, the sun came up for Peter. And it will come up for you too. By God's grace, you can start your life over any day you choose to. Today, this very moment, you can repent of your sin and go on to do great things for God. Peter ended up winning multitudes to Christ and leading the church. So no matter how badly you failed, God will forgive you, restore you, redirect your steps. That's a good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.